So now we're going to talk to somebody who speaks from above the fray. Marc Powell has experience in consulting with the best of the best, and now he's lending his expertise on how to do better in terms of infrastructure financings. What can you do to do it better? Please, Marc, it's all yours. And I appreciate your patience, and it's just last but not the least.
Thank you very much. I'm Marc Powell. I'm with PricewaterhouseCoopers, PwC. I lead the infrastructure strategy team in New York for the United States. And you may say, okay, so why are you here then? Am I here? Because my clients are investors in infrastructure. So I'm not that remote from the money. My clients are big infrastructure funds, big sovereign wealth funds, who are sitting on a lot of dry powder right now, hundreds of billions of dollars, looking to invest in infrastructure because their clients appreciate the stability of infrastructure investment. So you hear that, they say infrastructure opportunity Africa, yes, very big. Stability of infrastructure investment in Africa, maybe a little bit less so. So how do we think about that? And I like to think about a parallel, right? A step back maybe 10 years ago or so in Latin America, where Latin America was going through a similar boom with its infrastructure investments and with funds looking to deploy their capital over there. Many things, and we've talked about, right, the risks of legal stability, the risks of counterparties, and the like. And I think this is not new, and this is something that governments need to do and need to ensure the possibilities, right, through public-private partnerships, to have structures that bring foreign capital, but that require an element of confidence in the rule of law, if you want, in the fact that 10 years, 20 years, or 30 years down the road, a concession is still going to be valid and on similar terms than the one that you agreed to. I will point out one thing that we have seen in Latin America and that we're seeing in South Africa right now that's unusual for a large accounting firm like ours to get involved with, but that is very significant. In countries like Africa, like Latin America, most of the investment opportunities from an infrastructure fund perspective are greenfield investments. So you need to build something new road, new bridge, new airport, new port. In order to build it new, there's a complex web of partners that need to be involved. Many of those local partners with ability. The notion of controlling the risk from a financial investor's perspective is typically something that you pass on through contractual structures to your partners, right? So you will say, okay, I will put the capital in, but you are responsible for delivering on time and on cost on this build. And this is important because that's what the terms of the concession require, and that is what provides us our road to revenue. Very often in Latin America, certainly, there has been some strong or possible misalignment of incentives. And sometimes, right, jokingly, people used to refer to it as the brother-in-law conundrum, right? You have a partner, the CFO of the company is a joint investor in the project with you, but at the same time, right, is very interested in making sure that his brother-in-law's company gets a large share of the contracts, and therefore that that some of the profits are in a way transferred to another entity than the one that you're dealing with. So we've developed a practice, and that's a caricature, of course, but we've developed a practice at PwC around construction risk understanding, identification, and management, where we go in as an agent for some of these investors and help them really get into the weeds of projects through metrics, to identification of risk drivers, to monitoring, to interpretation of what is going on actually in the actual bids, so as to make it more easier for the financial investors to participate and to reduce from their vantage point the risk of non-performance by one of their counterparties that would potentially make that investment difficult. So I like to talk about it as de-risking of investments. Of course, you can never de-risk an investment,
Marc,
but lowering the risk of investments.
The elevator door is about to shut.
So that's it. So what can multilaterals do? I don't know. Supporting these types of services, I think, could go a long way. Thank you very much.
Thank you very much. I think you have heard a very rich discussion. Frankly, it's a pity that we had no time for questions. I will ask one last question, yes or no. Have there been any IPO exits from PE investments in African markets, in African stock exchanges?
Yes. Yes. Including from abroad.
Very good. I think that's a conversation you can take on, because that means that the equity markets are providing some exit options. That's very good. Thank you very much, everyone. My apologies for a fast process through this, but we are in an elevator, so what can you do? Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.